Hello, and welcome to a new episode with your host, Vinney Smile Chopra. I'm so excited to have you here as we dive deep into the world of real estate investing, syndications, abundance mindset, and building generational wealth. We are excited to be in the top 1.5% of the real estate podcasts. Got number 11 actually out of top 50 real estate syndication podcasts. Thanks to you. Each episode, we bring powerful insights, expert guests, and actionable strategies to help you take your investing game to the next level. Whether you are a seasoned investor or just getting started, if you love what you hear, please take a moment to subscribe, leave a 5-star review, and follow me on social media so that we can never miss an episode. Your support helps us continue sharing valuable content with more people like you. Now let's jump into today's episode. Thank you. This is that inner circle mastermind. It's for entertainment and educational purposes only. It's not legal, accounting, or investment advice. Webinar is not a representative of offer to sell or solicitation of an offer at all to purchase an investment or security. Consult your attorney, financial advisor, and CPA. Growth mindset is amazing. We got to have abundance mindset and growth mindset. We talk about that, and be positive, confidence, happiness, all those nice things. And I hope you're following. Please follow my podcast and my 2 shows, and then the 3 books. The 4th book is ready on hospitality. Course title From Vision to Victory. We should do modules each week. Today, mindset mastery for syndication success. The capital raisers mindset, why confidence and abundance thinking and resilience matters more than any spreadsheet. Then overcoming limiting beliefs. That's the breaking the I can't raise money myth. Adopting a leadership role, seeing yourself as a steward of investor capital, fiduciary responsibility to invest it right. Daily high performance habits, networking, learning, keeping energy high, and long-term vision, thinking in 3 to 5 years, exit strategies before you start. We do this one module, try to see what questions you might have. Oh, did I share the screen? Maybe I never shared the screen.
It was frozen, Vinney.
Oh my God, you guys didn't tell me.
You were going through the disclaimer. Maybe he's not going to share.
Attorneys want to make sure I share the screen. I apologize. Disclaimers for educational and entertainment purposes, not legal, accounting, or investment advice. Then positivity and growth mindset. Follow the apartment syndication and my 2 shows that I do weekly, and then books. The 4th book is almost ready on the hospitality, which is I've been in hotels 6 years, 7 years now. Done a little bit good in that one. Brother Franco is coming in. Let him. This is the one I was mentioning. Maybe we should take module 1, module 2, module 3. That way we will talk about different things each week, starting from this week. Module 5, module 6, value add execution, asset management, exit strategies. We'll start with module 1, mindset mastery for syndication success, capital raiser mindset, why confidence, abundance thinking, and resilience matter more than any spreadsheet. So it's good to underwrite deals, but the big thing is money, right? To have the overcoming limiting belief, breaking the I can't raise money myth, and then adopting a leadership role, high performance habits, and long-term vision. So maybe today we could talk what's on your mind, but mostly we could talk about first module, if you like, whatever you'd like me to do. Hey, Franco, how are you? What's happening?
How are you, Vinney?
Congratulations on the baby.
Thank you. She's healthy. Mom's doing great. 2 weeks in, doing great.
Excellent.
Fantastic.
That's awesome. Best news. You make sure baby's healthy and mom is healthy for sure. But let's go around the room and see what's on your mind. That'll be fun.
Yeah, lots on the mind. Franco and I will be together in the same room, which is awesome. That's big news. We're going to, that 10 unit that we've been talking about, we'll go through the closing for that and get through the walkthrough. And then hopefully have time to walk through that 40 unit or some of the units we talked about previously.
So which is this one, the first one that you are doing?
The 10 unit is the one we're going to JV together. And then the 40 unit was the one we went through. Right now, the rents are low and we have to stabilize it and just not do much as it relates to turnover. What we're looking at right now, our lender, the one lender we just started using, is super conservative and they didn't like that the rents were so low. So the interesting thing that we're going to try to do is we have the real estate company who brought this to us off market also has a financing wing. We gave them our other properties as collateral to see what we could do out of the gate. But what we're probably going to look to do here is probably syndicate the deal.
Okay.
And then it'll just come down to, do you raise all of the money or do you buy it outright and deal with the bank with the cash out refinance? If we're not using a bank, it would be about $838,000. And that's putting in some significant CapEx too, to make it so that it has a nice appeal for every room. About half of that would be CapEx. So that's one thing we'll look at. It'll be interesting from a syndication perspective. We have to stretch those muscles and get all that rocking and rolling. So we'll keep to be posted there, but we're going to have tons of questions for you, especially if we get that under contract and sort it out quick, fast, in a hurry. We're going to be picking your brain for sure.
Sure. You anytime.
Likewise, then we have another little 8 unit with another investor who said he had a few dollars left and he wanted to get in. So there's an 8 unit that we're going to provide an offer for on Friday. We're going to walk it and then provide the offer. It's beautiful. Looks great. We had a call with Buildium at 5 Eastern today. We're having a call with DoorLoop tomorrow at 9 a.m. Eastern. We want to move away from the lower end property management software we have been using and scale up. It's important to choose a better software like Buildium, giving owners to be able to have their own access to the properties that they have ownership in. And if we have a syndication, the general partners, for them to be able to have access. And I guess that's the one question I did have for you tonight. When you had your property management company, did you provide access from a syndication perspective to anybody to have access into a portal or anything to see their specific properties? What did you do?
There are two components of it. One is that internally, when you manage the asset, you are doing the rent roll, right? We call it rent roll. And that is the one where every resident's name, their information, rent they are paying, what's the market rent, all that. And then they pay rent and your bookkeeper or somebody will be adding it in there. Then you pull out a P&L of the expenses and the revenues. So what's really important to the investors is to give them the P&L, profit and loss for the quarter, kind of like that, and rent roll at the end of the quarter. For management, you need to do it monthly also, so that you can see where the occupancy is, where do you want to get the leases and all, when they are expiring, all those things. So what I used to use called Rent Manager, Bigger Pockets also used to promote them quite a lot. And it's a simple one. I know Qualter used.
And that's where it was interesting. We bought Agora for the syndication software so our investors could have a portal to go into to see what they have ownership into. But I never even thought about on the property management side, they were showing us they have an owner portal there too. I was like, I never thought about giving access from a property management side as well. Obviously, it makes sense from like a joint venture, like Franco as an example. It makes sense for you to have access into the C stuff, but I thought that was interesting. Like I didn't know if that was something that was common or not, to give them any additional insight into property management or not.
For 15 years, my investors never went into Rent Manager. I only provided them the P&Ls and the rent rolls, and we had full system of invoicing and paying the bills and everything. That was in Rent Manager. Now we use AppFolio right now for our portal for investors. When they log in, they are able to see their investment, and they are seeing how much dividends we have given. K1s are uploaded there, all that stuff. There are two different things. This Buildium might be one, if you're paying for property management, then maybe for a bit more money, use the other side to show investors to log in and just see the P&Ls and the updates, quarterly updates we give.
Yeah.
Ankur, so glad you joined. Franco and Thomas are buying their first deal. They're meeting next week. I talked to Dave
Congrats.
Mulvaney this week. He shared that you're closing one, and then the binary is also getting closer to. So congratulations on those. What software is cheap and good for somebody starting out, buying 10, 40 units, doing due diligence on? So what's your thinking on that? Have you looked into some softwares?
Yeah, a few companies pitched early on, but for this deal, we're going 100% debt. We'll be owning 100% of it. Even with the investors, we were trying to do that route as well. But what we had thought is we would just get them, Vinny, the way we were thinking about this, would just give them common stock. They won't be in an LP position.
Uh-huh.
So we weren't working on any formal thing. It would be like a P&L thing, like you were saying, communicating quarterly P&Ls through email and managing it. We didn't think of any subscription software.
I'm glad you're saying that, because with 10 units, I would say it should be very simple that you use a rent manager. You just design in Excel with all 10 residents.
We'll be moving all our properties into this too.
Oh, okay.
Yeah.
We use Agora for property management. It works. It's fine. There's some quirks with it. Like it's just not as high end. And I was thinking as we move into syndication, I wanted to make sure that we had just that next level. From what you're saying, we have your equivalent of AppFolio, Agora.
How much is it?
Just under $9,000 for the year. For Buildium goes based upon the units that you have.
Okay.
And we said, hey, we won't bring in any of the single family or anything else. We'll just bring in that 17 unit, the 10, and the smaller one, the 8 unit. And that is 2,000. It was under $3,000 for the year.
Okay, for the year. Oh, that's pretty good. They
have a 20% discount, so it was like $2,300.
Uh-huh.
We have to get syndications quick, fast, and in a hurry because we don't want to just be dropping $8,000-9,000 at a time.
Yeah.
To not have investors to report to. But that's one that we'll have Franco get set up on that in the very beginning so that he can show other potential investors what that looks like.
Yes.
We'll have that professional look for showing returns and everything else. For property management, we'll keep that close. No need to show anyone else the property management.
I used to do a webinar with investors will come and quarterly webinar. In the early years, I even did every month webinar just to show them, hey, this is the property, what we have done, curb appeal, this, that, all that, right? These are the people at the property that, because our investors never flew to see the asset. So it was good to bring it, the pictures and the pictures of the staff, those kind of things helped. That's how I used to do it. Now people don't have time. So we send updates, written or video updates, what I've done. And I think in the starting, I would say simpler the better.
Sure.
But if you have Agora already, keep that for investors. For property management side, you said it's Agora for property. I should be knowing about it. I don't know much else.
Will be the syndication for the investor view. It's your AppFolio kind of thing. We're looking at either Buildium or DoorLoop. Since we first met with Buildium, they have a great mobile app as well. The owners, the property managers, and the tenant, that was very strong for me. And then just a lot of the other features. But we'll meet with DoorLoop tomorrow and follow up with Buildium at 1 p.m. to converse and just say, okay, here's what we saw. And then we'll make a decision and then just move forward.
Okay. Walter, my co-host, was with Buildium for a long time. And now he's moved to, but he's got 450 or 700 units, something like that, or even more. So he's moved to AppFolio.
Yeah, that's the next.
Yeah, saving money is the right thing right now. And you can import those into any software later on.
I ChatGPT to say, what does the migration plan look like from Buildium to AppFolio? That was one of the determining ones to make it easy to move between them. Thank you.
Buildium is cool. I'm not paying for it, but my property managers have Buildium,
Okay.
which is good. It shows you like
Can you share the screen? Because Buildium, I've heard about it all the time. And
Yeah, I would be
Agora,
interested.
both are
Yeah.
new. Because I know about Real Page, I know about Yardi is another big one, Yardi. Then, of course, we used to do IMS or something. Then lately, I did Avestor. Now we are with AppFolio. AppFolio charges $1,200 a month. They go by the total money. We have millions of
which one did you say?
is the one we have. AppFolio.
Primarily focused.
It's actually
Actually, if
for,
you don't show that AppFolio, I'm
I would
going to
love
share
to.
AppFolio.
Yeah,
That'll be
I would,
awesome
let's
because
see
like
here. I don't know if I could show the login, but let me try. I'm sharing the screen now, right? Am I or no?
Yep.
Yeah, right there. Let's see, new tab, AppFolio, app demo. Usually you have to meet with a rep. Folio free property management software demo, free. But then this is the YouTube, which will how to use AppFolio. There is a little video that might be best if you want to see it. Let's see here. Now this will show us everything. The best way to see what AppFolio is.
Welcome back to the channel. For today's video, I will talk about this software called AppFolio for property management. So before we begin, what is AppFolio and what is the use of it? AppFolio Property Manager is a cloud-based property management software that allows multifamily and single-family, commercial, student housing, homeowners and condo association, and mixed portfolio property managers to market, manage, and grow their business. AppFolio includes accounting and property management functionality, including the ability to provide instant access to reports and statements, post and market vacancies, apply and lease online, screen residents, streamline rent collection, and mobile inspections. Features highlight self-service owner and renter portals, online applications and leases, online payments, built-in screening, maintenance request, mobile inspections, book text messaging, accounting and reporting, and a seamless mobile app property listing, management, cash flow management, landlord insurance, automatic billing, paperless work order generation, report customization. All Appfolio customers receive access to training and help resources as well as an award-winning support. Finally, property management software that gives you clarity to focus on what matters. Let's check its pricing plan. Going to pricing, they have three categories. Choose what's perfect for your business. For residential, they have two different plans. First is the core plan, designed for small to mid-size portfolios for $1.40 per unit per month, and the minimum monthly fee is $280 per month. You can have robust accounting and reporting, built-in virtual marketing and leasing, resident and owner management, online maintenance, mobile experience, and software updates. Minimum portfolio size of 50 units required. You need 50 units to avail this plan. The second is the Plus plan designed for portfolios managing 1,000 plus units for $3 per unit per month. It includes everything in core plan plus workflow management, performance insight, revenue management, data export capabilities, strategic accounting management, and its minimum portfolio size of 500 units required for implementation. So the next category or business is community association. In this
I
category,
do.
there is only one plan, which is the core plan for 80 cents per user per month, and you will be receiving dues and assessment faster with online payments, self-service online portals, and mobile app for homeowners and board members,
Mm.
bank integration, automated accounts payable, centralized communication, mobile violation management, online maintenance and work orders, online architectural reviews, and in-app messaging. The last one is for commercial businesses. They have two plans here. First is the core plan for $1.50, and these are the features covered in this plan. COM or CAM tracking, commercial reporting, online rent payments, commercial management views, vacancy marketing tools, and schedule rent increased. Minimum portfolio size of 50 units required for this plan. And the next one is the Plus plan, designed for larger mixed portfolios for $3 per unit per user. Minimum monthly fee of 1,500. The core plan minimum monthly fee is $280.
So this is the property management side right now. Ankur, did he go away?
He's going to be joining right back. He had
Okay.
to go mobile.
We used to use Rent Manager. This is AppFolio's property management side. We use the other portal, which is property management and investor portal. It's intertwined.
So that's interesting because I looked at it from both sides. AppFolio has their price. Now you're using AppFolio just from the investor side, not the property management side, correct?
No, their pricing is based on portfolio size. I'm paying 1,200. You have to see what makes sense in your situation. Like you said, Agora, you already paid for
Yeah,
it.
Agora is way too much for what we need. You should check them out. Yeah, actually blew me away.
Agora, if we say here, I don't know, maybe we don't want to do that, but
Well,
Agora.
Agora. If you go into chat, I have the link there.
Oh, let's do it. This might be really good for everybody to understand. So this is the one, real estate investment. Is there a video like that too?
I don't know.
Yeah,
I
YouTube.
I-
Agora, YouTube. That will teach us everything. Beginner's guide, the folio, very clean, very nice, best in class. I do remember, I heard the name Agora before. Look at that. Industry success, assets under management, 2 or 300 billion. That's very nice. 150K investors. So this is from the investor side, right? Yeah. Investor portal, CRM, fundraising, investment management, investor reporting, not property management. It is the other side. Yeah, other side.
Correct. That's where I was
Yeah.
interested because Agora, for the way you're using AppFolio, we're going to use Buildium or DoorLoop the same way Walter is using AppFolio. And
Perfect.
I just the pricing isn't too far off. You're a few $1,000s more for AppFolio versus Agora. If we have their property management side, is there cost savings there?
Maybe have a demo with AppFolio too. They might give you both sides at a discount.
Maybe something we'll look at. Since we just dropped in August, we just dropped $9,000 on the other one.
I think let's talk about module 1, raising money, right?
Yes.
What are your plans? Discuss how putting a packet together is very important. Investors want to know what you're buying and what returns they'll be getting. What's the IRR? What's your business plan? What are you thinking?
Creating content. I want to put a lady's Facebook page in chat. She does very well. She has raised a good amount of money for property.
Tisha Kennedy, this is her Facebook. I think I have to be in Facebook to see her. It's asking me to log in.
I can share my screen.
Can you
if
share?
want.
That's the best way.
Yeah, let me screen too. I have to click share. She does something consistent. She doesn't do a lot of video content. We need to mix up the video because it becomes noise when you're putting too much video content out, especially on Facebook. People are not seeing everything. She has infographics that I really like. That's one thing where I had ChatGPT create 50 for me. We're going to start having these created here.
Show your account of ChatGPT. What prompts did you give them?
Sure.
Did you get 50 of these? That's fabulous.
Give me a second. I'll pull that up.
Okay, that's fabulous, brother.
We reached out to some developers, and my wife said, I could probably do this for you too. We started this, but I wanted your thoughts to tie it all together. We talked about doing webinars. We get a lot of interaction. The most interaction is when showing properties, like real properties. That gets the best ROI. I wanted your thoughts on mixing content with infographics. A call to action seems the most difficult to get more investors. She never has a call to action. She'll schedule webinars, and that's how she'll get her drawing a blank here. That's how she'll actually just get her investors. She'll just say, hey, it's a 501b kind of thing.
506b. The main thing is to invite people into the webinar who you know, right? you can't advertise in Facebook. And wait a minute, you cannot share the deal, you can't advertise it, but you could show them case studies, get to know them before you show them the deal. That's the real deal. Real sequence of events is you meet with them through a webinar. You could talk to them about value add, how you are considering buying this deal, and so forth. And this is what I'm trying to say is, in my case, I'm due 506C. So I can talk to a stranger. It says it's for accredited investors only. Anybody can look at my deal. I can talk about IRR numbers, but you have to be careful what you are sharing in the first meeting with investors is mostly educational.
Sorry, I couldn't walk
Yeah.
and chew gum. I'm looking at ChatGPT. I'm looking at hers. I couldn't even speak because I was like two different places. But
Yeah.
focusing on this for right now. No, so what she does is she goes and she hosts like a 101 series. So she'll take some of this content and then just have a deck full. Hey, what is real estate syndication? What is X, Y, and Z? Then she will have a couple of those, and then there will be a chat where she gets that loophole and chats with you. You're on her list, and then she has you as her friend and family then because she has had you on a
I
webinar.
see.
And then
Okay.
shows you the deal that she wants to
Very
raise money
nice.
for.
Excellent. As long as she's talking to them 1 or 2 times, that's perfect. This way they are interested and looking at her. I need to create Facebook posts for my raising business and golf simulator business. I want these posts more specific. You tell ChatGPT, then it starts making. So you say, I will look to pay someone to graphics. I want to start first 10 posts. I would want my real estate syndication business. This is using a person. See the Facebook inspiration. I like that. Inspiration, name, and what did she write there?
I gave
Okay.
lots of examples. And
Beautiful.
then she stays constant with her content, right? She gives tips for real estate investors. She'll have a picture with saying it does a good job of keeping things fresh without being dull.
Like that.
And then comes back and says, awesome, this is going to be fun. It started first with 30. It goes, okay, here's the infographic copy and then the caption copy, meaning here's what's going in the Facebook post. Here's what is going to be the content for your infographic. I asked for both. You'll see here the whole section on what she talks about in the actual infographic.
Beautiful.
It gave me a 101, but then also more 101 stuff. And those are all 101s. 5 ways syndication creates wealth while you sleep. A little bit different.
Love it.
Flow for
Love
rent.
it. Yes.
What would go in the post itself? I asked more questions then and literally went the whole way down the list.
I
And then we
love
started
it.
getting into asking about images.
Yes.
I got a question on Facebook and webinars. Vinney, what's your experience with investors working that way? Because the way I'm envisioning it and what I do on a daily, like the W-2 stuff, is when you go into these high net worth type players, they're very quick to the point. Boom, they go with someone they trust. You want the numbers, digest it, and come back to you. The online Facebook stuff seems like a bigger reach, but do you get bigger investors that way? Or is it more personal? In my field, it's word of mouth, right? Some people vouch for you. Boom. How does it go into this?
I see both sides. Your 21st investors in your first or second deal are in your contact list anyway. So I would say that you want to design some email or some presentation for people that you can invite that you already know. I'm glad to see this, Thomas. Yes, thanks for sharing. You want to work with both. You want to work with the people in your contact list? Definitely, because people will trust you and everything. But at the same token, when you are presenting ideas on and the hook is there, right? New people will also then come into your fold and you will start building trust with them and relationship with them, and they will also invest with you. So it's a combination of both.
Okay.
Yeah.
For anybody in my phone book, not everyone is open to reaching out for real estate. People reach out and say, hey, what are you guys doing? We're doing these walkthroughs, creating content. They know if I'm reaching out, there's at least, hey, they must know what they're talking about because they're living it and showing it lives here.
Got it. Got it.
But
Yeah,
yeah, as you see here, we have all video content.
I love it. First time
We need to switch it up and get some of that other static content she offers.
combination of two will be
Yes.
tremendous, tremendous. But do put call to action in my postings. My team puts Calendly link. We have a free strategy call.
That's what I've been missing. I
Please
used to give
that, yeah.
Calendly links, and I need to
Yeah.
do that again. Okay.
Yeah, let's do it. That'll be fabulous. I do it through Go High Level because calendar is built in. Calendly is very good. There are cheaper ones too. Always post something so that they could click the button and they can then come into your system. Yeah.
Right.
Call to action. CTA. Call to action.
Oh.
My company, my team, Vinney or something goes into Calendly. Beautiful. I'm so glad we are talking about raising money because that's the crust of the syndication process. As you are getting the deals closed now, and you have very short period of time to raise the money. So you got to get in high gear. It's one thing to get people interested. I still definitely want to ask you, if you start making like a presentation in a PowerPoint, why they should invest with the pictures and other stuff and how it's going to make difference. What's good deal about? Why you're so excited about? What's the business plan and how they get paid? Please put that together in Canva, in PowerPoint.
So, Vinney, when you're doing PowerPoints, do you try to do a summarized version and then a select for more detail so it's not overloading the investor? They can get the gist, picture the place, how many units, what are you buying for? What do you think it's going to be? Here's the dividend.
Okay.
If you want more detail.
Yeah, the
Yeah.
bigger one, like I think the hotel we are buying, Plano, Texas, we have 11 page, 23 or 30 page, and 53 page. Wow.
Got it. Yeah. Okay. Gotcha. That makes the ones that want to dig in.
Dig in more, but definitely sell the sizzle. Always keep that in mind. You got to
Yeah.
sell the sizzle because if they're looking at 10 pages or 5 pages, you got to bam. What are the returns? What is the business plan? Why you're buying it? It's got a huge upside. And then also designing an email with the links. I might have shared some emails with you all before.
If there's anything else you've updated or changed, definitely send our way.
Perfect. I can share that with you. Once you are ready to sign, you have 90 days to close. You want to get in high gear with due diligence, legal paperwork ready for investors, and making sure that you have the packet ready for them to information packet, we call it, or investment packet, brochure, those three things. So would you be doing a JV or what's the next step?
It depends. For the 40 unit deal, looking through the numbers, how much money do we give up to, at a certain point, depending on how it's structured, it's too much work for the effort, right? Like it's for what you're getting, right? Like when it's a smaller deal.
Totally. Yes,
And-
yes.
And a syndication of 506B would be the preferred route to keep a minimum number of investors. Like if we're raising just under $1 million to syndicate that deal, I'd rather the safety of targeting 5 years. The preferred return could be retroactive, but you're not going to be seeing anything for a little while as we get those rents up. And that from a return perspective makes the most sense, even for the cash out. Like it would just make sense to exit at 5 years and call it a day.
As long as the investors know the cash flow is after 2 quarters, 3 quarters, or next year, and they understand when is the cash flow coming in and then the upside. Yeah.
Walk us through an example. You had one deal that took a year to get the rents up. What did that look like for your investors?
Are you talking about Knoxville, Tennessee, where we increased the rents?
You had one super low. It took you the better part of a year to get the rents up.
The Knoxville, Tennessee deal, let's see if I can open it. We were going to increase the rents twice. It was low. It was a flipped already because they had done renovations, if I remember correctly, 107 units. And the key thing was that we wanted to make sure that we are able to.
Sorry.
It was dark over here. Essentially, the cash flow was there. We started giving cash flow to investors at a smaller level, but we knew that we're going to be increasing the rents because the differential was that the rents were half than they
Yeah.
should have been, right? So it
Yeah.
took us time. We kept the occupancy 95 to 97%. We didn't want mass exodus. We didn't want that at all, which you don't want either, right?
Yeah,
Because
for
then
sure.
how are you going to pay the mortgage? So what we did was slowly, as the expiration of the leases came about, we were educating the residents that, hey, the previous owner sold it to us because she was not making money. That's the real deal. That's why she
Yeah.
sold it. She was paying for cable, internet, water, everything. They were paying only electricity. So we said that we'll be instituting the RUB system. So we had to write that, and the property management lady, we showed her the whole bill of the water. We put it in a binder. If any resident wants, they could see it's $12,000 a month, just the water alone. So we were educating them. That's how we did it. And then started increasing the rent.
Most
The
stayed? Did most stay?
quite a few people stayed.
Yeah.
Those who moved, we got new ones in.
Move and pay that much somewhere else. They might as well stay where they're at if they like the place and you're a good owner.
Exactly. That's the key. Keep a good balance of not going too low in occupancy, but increase the rents slowly. 1 year later, we had double the rents. Wow.
The ones that stayed, were you doubling it up next go around or did you incrementally raise
No,
it?
no,
What'd
no.
you do?
Incrementally,
Yeah.
brother. We just
Okay.
increased maybe 10% first time, not 2 or 3%, but 10%. Another month, we said, we're going to give you some time. They knew if they were going to live in that neighborhood, other apartments were costing a lot higher. Yeah, yeah. So I think it's very good that what you're trying to do right now is to implement everything that you have learned. Raising money, putting the packet together, emails, webinars. It's good to find a solid buyer, investor, give a demo to just them. If 3, 4, 5 people, one gets negative, then all of them get
All of them.
negative. Negative investors don't invest. We're putting the packet together, be ready to answer questions from their perspective. They want to know why you're doing this. And so put the whole presentation together as if you are investor. And how would you find out about that, right?
Thank you very much.
All right. What else can we talk about today?
I'm interested in AI and
Mhm.
ChatGPT and how that's affecting the workplace, right? They're
Yes,
talking about
yes.
layoffs, this and that. And it seems like there's this perfect storm brewing for these type of units type deal, right? As we move into the next 3-6 years, jobs are going to be replaced by AI, robotics, and so forth. Complexes, right? These 10 units, 40 units, 100 units where it's not too expensive to live are going to become more popular and always
Correct.
full, people coming down because someone lost a job or whatever. Even if they go somewhere crazy in 5-10 years where you've got so much AI, that whole crazy universal basic income comes in, people have to go somewhere. It's like shopping with inflation.
Yeah.
They go from higher end grocery stores to Dollar Tree, right?
Yep.
Same thing goes for this. So people not refinancing just yet because they haven't dropped the rates fast enough that to
Yeah.
save. There's the opportunity to buy. As rates come down and demand's going to start piling up, it seems like it's all going to come to a head in the next few years is what I'm seeing here. These are going to be like optimal to own or sell at that time. Interesting space to be in right now.
I'm glad you're saying that, Franco. 100% right. People are buying good, solid multifamily as they have a good price point right now, what you're buying, and then you know what you will do it with the renovations. About half, you said, 400 or so.
Yeah.
Then you are making it better. When you make unit better, you can command more rent. Yeah. So what you're doing is really right. And the other part is that this is a C plus or B area, if I remember correctly.
It's right between Greensburg and the outskirts of Jeanette. It's a good area for Jeanette. Jeanette's blue collar. Yeah.
Got it. So essentially, and it's smaller unit, which is good because that way occupancy, you could fill up faster in a smaller number of units, you could see more variation in that side right there. So I think that with the underwriting, you did pretty strong underwriting, and you have the plan to take over the property, make sure all the T's are crossed, I's are dotted with the foundation, sewer lines, and everything, and then the roof and appliances. So those are the major ones. Do you
What's the
want
purchase price on Thomas? I forget. It's
Purchase
been a
price
couple weeks.
So they're asking 1.8, and we can get it for 1.6 approximately.
6. You were talking about
Yeah.
800 to do the financing on that.
So-
So raising 800. It's the rehab plus 20%.
That was with everything.
Got it. To make it worthwhile, next year, if you want to give cash flow, what does it have to be?
So right now, every week we don't have it is rough because rents were low. So like market rent is $1,117.
I
Okay.
see.
They on average have the rents around $599.
Oh my gosh, look at that. Wow. Wow.
Instead
Huge
of getting
potential.
people up to 1,000 or 1,100, they're
Yeah.
bringing people in and have the rents advertised at 725. And
Oh, I see.
I don't understand because they have a property management company. Every day that goes by is another person that fills up the remaining vacant ones. They had 9 vacants, which was good because we could get in at the proper rents. We had that one agency, we can give them 8 and be covered. Many are month to month, but there's going to be a handful that's going to be a year that we're going to
Yeah.
have to wait.
Could you tell the seller you're increasing the rents, but could you do it for 3-month lease or 6-month lease rather than 12? Because they're trying to sell it. They're going to collect the same rent by the time you close on it in 3 months. So why lock it in for 12 months?
We were not there with them yet, trying to get a bank to finance it. We had moved to other ones, which would. But with that being said, it was the actual real estate company that was pumping them to do that, to just get it so that they
I
had it
see.
in a place that they
Yeah.
could sell it. Not listing it until you get enough rents in there. Otherwise, you're going to have a
Yeah.
heck of a time and everyone's going to lowball you. That's where their motivation came into play. It was rough. We had another one where they brought it to us, but then the 8 unit that we're going to put an offer in on and hopefully just get on a contract next week, or not
Yeah.
next week, I'm sorry, this Friday. They got all of their units locked in for lower than needed. We have a year to wait. Why the highest rent? I don't understand why they
Yeah.
rush to get a lower amount when that's less money in their pocket. I don't understand.
They're trying to make the payment, right? They're trying to
That's-
get in whatever they can, not lose, sell the
Yeah.
property, not have it foreclosed on it.
The 40 unit building, I went on Onyx. I don't know if you've used Onyx, but that's how the app that I'll go on, and you'll be able to, it's a hunting application, but people use it for real estate, where then you just put it in and you can see who owns it, the acreage and everything else. Then I use that to go down the rabbit trail of how many other properties do you own? And then you can look at their entity, or more importantly, like their tax address.
Yes.
And then all of a sudden you see all the properties that they own. And then this property in particular, the owners have many complexes. And that to me was more confusing. How do you have that as a practice when you're letting a property management company jip you out of money?
Do you ever, Vinny, I have
Go
a
ahead.
question. Is there
Please,
ever a
please.
time where you have these vacancies, trying to sell, talking to them about it, but they're filling them in with cheaper rent? Is there ever a situation where you tell them, well, you're trying to sell it, we're trying to negotiate the number to cover the low rent you would have gained from having it rented, that stays vacant, and you start working on it right away and raise the rent, so you don't have that year-long lag period?
I see what you're saying.
We don't have it under contract. With the 10 unit that we bought, we told them not to fill some units, to keep them vacant. You can do that. In this case, where we don't have it under contract, we didn't give them the official offer yet, because we had to, one, make it so that, because us going in by ourselves with a bank saying, hey, listen, we're not going to finance this with the rents being this low, we had to go to another. We didn't get it under contract yet. When you get it under contract, you can tell them, stop, cease and desist putting people in these units, unless you're doing it for market rent. But even then, you don't know who they're putting in. More often than you wouldn't want them to put anyone else in.
In the purchase and sale contract, it's written all leases should be okayed by us as a
Got
buyer, something like that stipulation, so that they don't put mediocre people and low rent people, all that stuff. So that might be something you can negotiate it. And what you're saying is right, Frank. You could say, hey, leave, oh, if they're vacant, but you definitely are going to close in 2 months, then what it's going to really, let's think here. If it's $500 for 2 months, that's 1,000 they're losing. If you could compensate them somehow.
figure out a way to compensate them equally. Say, don't fill these 10 in. I know it's going to
Yeah.
be $10,000, which could
Yeah.
mean the difference of making a payment.
Make it month to month so we can evict them if we need to.
Yeah. Ask them, we are buying, just do month by month, because then they are just getting it for that month. And then you come in, you put them into 6 months, 12 months lease at a higher
Okay.
rate.
Yep.
Yeah.
Thomas, I had a question.
Please.
By the
Yeah.
first question, why are they selling? I'm interested in finding out why they're selling. The second question really is related to what kind of workforce profile is in the area. In other words, with this ChatGPT and all this AI that's popping up, what might they expect as losses in employees? Because they might not have as many, maybe they have soft white collar, what I call soft white collar employees there. So I was wondering about that so that you're able to fill these places with tenants that are ongoing, and whether or not this is in a path of progress. Those three things popped up in my mind. So you're making the right investment at the right time.
Great points and questions for sure. And the answer is my business partner has a significant number of properties in this town where this is at. And this town in particular, it's about 10, 15 minutes from where I grew up. It's a suburb outside of Pittsburgh is the best way to put that. But it is, we'll say, almost 100% blue collar. And the vacancy rate is very low. There are not many units available for rent. It's very competitive for the renters to get a if you're in this town called Jeanette, then and you're wanting to stay, there are not many units available. It's good from a landlord perspective because it is very competitive. Why is this property having issues as it relates to that? Is a great question. And I know that we had asked what were they doing? They're wanting to consolidate and move to an area where focus on other areas. I forget the exact story, but we're going to have to go through that again as to why they're getting rid of it. I'm okay with them being checked out and not checked in and mismanaging the property. Why you would let why the property management company wouldn't want to have more rents coming in that they could collect fees off of, that to me is mind blowing. Like that I don't understand at all. That company shouldn't care about the owner apart from I want as many rents as possible coming in. They did the disservice. From my understanding, it's not the owner, it's just a third party managing it. They're doing a poor job. When you're remote, potentially, that's one of the things that you can be subject to if you're not checked in as an owner yourself. But as it relates to your questions about path of progress, this town is always going to be a closed loop. It is in the path of progress of Greensburg. Expanding out in rings is what it does. And it absolutely is. They're investing in that city. And it's definitely nicer than when I lived there growing up, I think. So it is a good area. The rents are good. The only downside is the school district. For example, where we bought our property, even though Vandergrift is a town, the area is a blue collar. School district is affluent outside of where it's at, what it's a part of. And people will move there to have their children be part of a better school district. So the 40 unit is not in a great school district itself, but people live there their entire lives. For those units, we'd be in a fantastic spot for. We wouldn't want to be buying something that would had hundreds of units in that town because we would have trouble filling it. They have complexes, but it's also single family and duplex area. It's deceiving how large it is. Wow, I'm still driving through the city. It's not small by any stretch of the imagination.
What's the population, Thomas? What's the population of Jeanette? Jeanette?
I
Yeah.
can pull it up in 2 seconds here.
And are there new industries or businesses coming in?
You have access to everything.
Okay.
The town has 8.78 thousand people as of 2020, just under 9,000 people. It is 10 minutes or less from Greensburg.
Which is, yeah.
Yeah, which is larger. It has 15,000. There's other pockets of similar size, the whole area. So you're 5-minute drive from everywhere, pretty much.
Oh,
5-10 minute drive, like to all kinds of different places. And then you're
I
on your
see.
way to Pittsburgh as well. It's not like Mississippi.
So
town.
far away.
Tens of thousands of people everywhere. People
Sure.
can live there, work in Greensburg, Pittsburgh, anywhere in between. Normally, the people that live there, grew up there, that's their home.
Got it.
The reason
Right.
I ask these questions, Vinney, Franco, and Thomas, is that Vinney and I have been doing business together for a number of years and
Yes.
really going to be doing some more with this hotel in Texas and other opportunities. I'm
Yeah.
listening to see where there might be opportunities for me with investors, potential investors that come to this conversation. Because Carol has a lot of properties herself in Las Vegas.
Yeah.
Las Vegas is going through a spiral. We're considering where we want to invest besides the hospitality industry, Vinney, so we can by the portfolio.
Right. Pennsylvania is really good. Walter is mostly
Yeah, I know
in
what
Cleveland,
you're
Ohio.
saying, though.
He's finding great deals in those places, but there are no great opportunities right there where you are in the Pittsburgh area. I know we were discussing about Louisville, Kentucky also. I remember a couple of calls back. We were thinking about that. In Indianapolis, I think north of Indianapolis.
I don't know
Maybe
if
that's
that was. I've looked in
somebody.
Louisville. I have friends there. I would love to invest in there just for the fact that it would make me go down there a little bit more often. I've looked in there for that particular reason. But we have definitely looked at Cleveland and Cincinnati, made plenty of offers and road trips. There's lots of
Nice.
opportunity due to the fact of how they expand there and what they're doing. There's so many pockets. It's very similar to like almost like Houston, where there's always a new neighborhood that you haven't found just yet, where the numbers work.
Sure. I think it might be good to ask some prompts to see in a small town what are great opportunities for buying distressed multifamily in the range of 10 to 50 units and then see what it pulls out for us.
Daryl, I heard you, Franco and I will put it by you and let you review any deals. We've been hanging out on a call for years. Pass along anything we have.
Excellent. Yeah, no,
Yeah.
that's the best way to learn together and to partner. Fabulous. I hope you got a lot out of today and look forward to next Wednesday. Thursday is Thanksgiving. Give thanks to everybody.
Yeah. So Wednesday, we may not be on because Franco may be in midair.
Going to Dallas.
Yeah.
Maybe we'll skip next week. We'll find out how many can attend.
Thanksgiving.
At least 4 to 5. Otherwise, we can have Thanksgiving and meet the week after next.
Lots of great updates.
Yeah, that'll be amazing. So we'll skip next week then. Yeah.
Cool.
Let's see what Chairman Powell has to say.
Oh my God. So much is dependent on that. I
Oh,
know. It's not happening. The rate cuts are not coming.
There's so
Very high because of tariffs.
And we'll see what they do. The numbers come out tomorrow, the jobs.
Tomorrow, I think. Yeah.
So we'll get a better idea. And then the next week or two, they'll have more data before December. We'll see.
They say the data that's lost is gone. What do you know?
Thank you. Have a good night and we'll meet then. Thank you.
Bye, Vinny. Thank you. Appreciate it.
Congratulations. Bye. Bye.
Dear friends, this is Vinney Smile Chopra. I am so glad you're listening to the episode. Thanks so much. Really appreciate that. Please share it with others who can really benefit also. Can I ask you a favor? Just a small favor. Less than a minute, if you could give 5-star reviews on iTunes or Stitcher, that'll go a long way. We are one of the top podcasts in real estate now in the nation, but it will really help a lot if you gave 5-star reviews, and we'll bring a lot more great content for you. Thank you so much. Appreciate that, and see you in the next episode. God bless you. Bye-bye. Wow, what an incredible conversation today. I hope you got tons of value from this episode. If you did, don't forget to subscribe, leave a 5-star review, and follow me on social media to stay updated on all the things real estate, investing, abundance mindset, and wealth creation. If you're an accredited investor looking for exclusive investment opportunities, be sure to join our elite Monil Investors Club at vinneychopra.com/invest, where we share details of our future projects. Quick disclaimer, we are not selling any securities, and this podcast is strictly for educational and information purposes only. The opinions shared by our guests are their own and should not be considered financial or investment advice. Always do your own due diligence and consult with a financial professional before making any investment decisions. Thank you again for tuning in. Until next time, keep smiling, keep investing, and keep making a massive impact. God bless you.
That's all for this episode of The Investor Impact. Stay tuned for the next episode and don't miss out on the opportunity to learn and grow alongside this powerful inner circle.